Well, I'm Jigender Rana. The topic for our discussion today is India Motor Insurance Market. India Motor Insurance Market. The India Motor Insurance Market was valued at US dollar 12.15 billion in 2023 and is expected to grow at a strong CAGR, that is compound annual growth rate, of around 6.31% during the forecast period 2024 to 2032, owing to the rising growth of the automotive sector in India. Motor insurance, if you see the India motor insurance market analysis, you will find that motor insurance is a part of general insurance that is subjected to offering comprehensive protection coverage to the owners of the vehicles of different categories in case of repair and theft. So these insurance policies are offered by various public and private sector financial institutions and banks regulated under the Insurance Regulatory and Development Authority of India. The insurance policy covers the majority of the non-consumable items and their damage repair for the insured period of time. So the India motor insurance market was valued at US dollar 12.15 billion. Now, one of the factors that has been majorly attributed to market growth is the increasing sales of automotive vehicles in the country. Considering the rise of the middle class population as well as rising disposable income in the country, the automotive industry has benefited from increasingly high sales in recent years. So this increasing sales has led to the demand for both first party and third party insurance, which is mandatory along with the road tax payment for any automobile purchase. Additionally, with the various policy shifts, the demand for motor insurance will further be propelled in the coming years. So additionally, motor insurance holds a sizable share of the overall general and health insurance market in India. According to IRDAI, the total premium underwritten in India for motor insurance was INR 70,433.48 crores in 2021, which increased to INR 31,280.04 crores in 2022-23. So the majority of the share for motor insurance is held by the public sector with approximately 80% market representation. So there are certain factors that are influencing the various segments of the India motor insurance market, like rising trend of electrical vehicles. The electric vehicle is a rising segment due to the growing focus of the customer towards sustainability. Electric cars offer various advantages over internal conventional fuel vehicles, such as lower operational cost over the long term, no tailpipe emissions, etc., as electric vehicle sales in both the two-wheeler and four-wheeler categories have been witnessing higher sales. So the demand for motor insurance is anticipated to rise in the coming years. As per the sales data for automobiles, the total sales of electric vehicles in 2023 accounted for 1.53 million, which is a 50% jump from 2022. So additionally, the government initiatives offering free road tax in many of the states have further promoted the sales of electric vehicles in cars, two-wheelers and e-rickshaw categories, which would contribute to a higher number of motor insurance markets in India. So considering the rise of automotive and the electric vehicle category, the demand for motor insurance in the respective segment will grow further in the coming years, that is 2024 to 2032. North India holds a sizable market share in motor insurance. One of the factors attributing to the growth of the North India region is the high sales of automobiles in the previous year. The region comprises sales such as Uttar Pradesh, New Delhi, Punjab, Haryana, Jammu and Kashmir, etc., which have sizable population as well as have witnessed incessant growth in vehicle ownership in recent years. According to the Society of India Automotive Manufacturers, Uttar Pradesh, New Delhi and Haryana had 10.04%, 5.94% and 6.60% share in car sales in 2023 in India. So a similar trend was seen while observing two-wheeler sales with 14.35%, 2.5% and 2.89% sales in similar period. So with the high sales of automobiles in the North India region, it is anticipated the demand for motor insurance is further anticipated to rise in the category or in the coming year, that is 24 to 32. So the India motor insurance market is competitive and fragmented with several regional and market players. The key players are adopting different growth strategies to enhance their market presence, such as partnership agreements, collaborations, new product launches, geographical expansions and mergers and acquisitions. Some of the major players operating in the market are ICICI Lombard General Insurance, Bajaj General Insurance, Tata AIG General Insurance, HDFC Airways General Insurance. And among the PSUs, New India Assurance, United India, the Oriental and the National. So this market is bound to grow because the Indian motor insurance market can further be customized as per the requirement on any other market segment beside this. Now, motor insurance is one portfolio that was since beginning at the top in India. Means the biggest portfolio of general insurance industry. Now, health insurance has taken over. But despite flat general insurance penetration in the country, the non-life insurers are expecting to register double-digit growth in 2025 with a conducive regulatory environment and launch of innovative products catering to specific customer needs. So the industry is also expected to meet this expectation if it receives a favorable outcome on GST relief and a revisit of both our third-party rates at top. While health insurance will continue to drive growth in the coming years, there will likely be significant expansion in non-motor and non-health segments such as pet insurance, liability, professional indemnity and housing insurance. So the emerging trends in the automobile sector says the market will grow definitely, and along with all category of vehicles, because the global motor insurance market is experiencing a significant growth and will grow considerably in the next few years. Motor insurance is an insurance provided for cars, trucks, motorcycles and other vehicles. The demand for motor insurance is high and increasing its adoption among consumers or customers because it ensures financial protection in the event of vehicle get damaged as well as injuries to other drivers, passengers or pedestrians. That is third party cover. Hence having car insurance is a legal requirement and a necessity with the right level of cover. There are financial benefits offered by motor insurance in order to offset the cost of following damages like that is bodily injury to owner or others lost wages due to injury, full settlement of insurance and nominees holder in case of death, and repair made to the car's damage caused in an accident. So the number of road accidents is increasing in most of the countries across the globe. The motor insurance market has a lot of scope for growth in forecast period. The notable factors positively affecting the motor insurance market include rising number of accidents, regulatory requirement for the adoption of auto insurance and increasing sales of car. Our high premium cost and the integration of advanced technologies in cars can hinder the market growth. Because the growth depends on lot many factors. Lot many factors which are directly impacting this category of portfolio. Now see, the world of technology is dynamic. Technology consistently makes waves in every field and insurance industry too has benefited immensely from the advantages so technology offers. So at present motor insurance in India is being priced based on parameters like the make and model of the vehicles, its capacity, the geographical use, etc. There can be several other aspects to the use of a vehicle. For instance, customers who use their vehicles for lesser duration of lesser distances are prone to lesser risks, and those who use the vehicle for longer duration and more distances are prone to more risk. But both sets of customers today pay the same premium for a particular vehicle. In actuality, there are various parameters to be considered in the assessment of risk that a vehicle is exposed to, such as upkeep of the vehicle, how frequently it is driven, what distance it is driven for, the quality of roads it is driven on, the driving habits of the driver, and so on. So consideration of these factors will lead to a more meaningful risk assessment and provide for accurate mechanism for pricing. There are a variety of driving habits of customers and uses of vehicles also varies widely because of many factors like new forms of transport, demographic shifts, whether one is driving one's own car or somebody else's, etc. Also due to increasing use of other modes of transport like suburban trains, metros, employees provided transport, private rented cars, taxis, etc. So some people may not be using their own vehicles frequently. Where usage is less, the vehicle would be prone to lesser risks. So on the contrary, public transport, rental vehicles, etc. are prone to more risk as they are on the roads for a longer duration. So the premiums are being charged based on available information related to limited parameters. Only if accurate information and more relevant data are available, premium can be worked out more scientifically, commensurate with the risk involved. So telematics as a solution. Telematics can offer a solution to the above aspects. It can enable insurance companies to use technology not only to assess risk better and also offer more efficient claim services. There are technologies enabled through internet connectivity that offer solutions ranging from embedded vehicles telematics systems to smartphone applications that can challenge traditional business models and create new opportunities, setting one rethinking on how insurance companies can carry on business. It has been seen that these new technologies can provide a wealth of opportunities for insurers to offer new value-added services to policyholders. So telematics is one solution which can provide a lot of benefits to the customers. Now, we anticipate increased innovations in product development, underwriting, and customer servicing, which will play a crucial role in deepening the reach of insurance to citizens, not only from urban cities but also from Tier 2 and Tier 3 locations. The insurance industry is set to undergo transformative shifts, emphasizing personalized and proactive offerings driven by digital innovations. So, the importance of leveraging digital public infrastructure to reduce cost and extend essential insurance products to understand areas. Initiatives like Bima Sugam, Bima Vistar, and Bima Vikas will pave the way. Thank you. Thank you very much.